Thank you for taking time being with us today. Tell us a little bit more regarding your background and how did you get into real estate?
Well, it depends on how far back you want to go. But the interesting part is most of us know somebody that has made really good money in real estate, a relative and so on. And it kind of plants a seed in your mind that maybe that's something that you want to do in the future. And,
Okay.
I've been in corporate America designing computer chips for 25 years. That's what I studied and made my career on, and worked on chip design companies for many years. And the last company that I worked for was Apple, and I worked for Apple for 10 years. I tried startups. It seems like I've tried pretty much everything that was available. Living here in Silicon Valley, of course, there's when I was in Silicon Valley. Now I live in Arizona. But I tried startups and I tried different ways of becoming financially independent via corporate America. And what happens in the US, especially, is that there's so many taxes that you pay. The tax burden on corporate America on a W-2 income is the highest. And it became very clear that even going through a startup and doing relatively well with the startup, that I wasn't going to become financially independent. So I started to really become disillusioned with that avenue, and also with the real estate market, especially with the downturn that we had, the recession in 2008, where a lot of people just lost their investments in stock market and mutual funds and that sort of thing that really wasn't paying out. So with the disillusionment and with the seed that I had in my mind in 2011, 2012, I decided to make it a focal point of my life, and to remove all the money from mutual funds, all the money from the stock market investments, and just concentrate on rental properties and see if I can really create wealth. And that's when I really started at the end of 2011, 2012. I worked for made a goal for me to invest in real estate for a couple of years and be able to retire from corporate America. And I was able to do that in 2014. I retired from Apple, having enough income in real estate, income property, would replace my income with Apple. And that's how I've been living my life since 2014, just managing my investments and spending time with the family and being able to travel and do whatever I want, not being tied to a job.
And how many properties did it take you to be financially free?
My goal was, I got to 50 properties, about 70 units. And the reason I got to that point was, again, at the time I was making good money at Apple. I was making $250,000 at Apple. And I wanted to, because of the taxes, half of that goes to the government. So I was only keeping 100 to 125,000 a year. And therefore, I needed to have that much in income in real estate for me to be able to replace it one for one. And as you know, in real estate, because of the multifaceted aspect of it and the tax advantages, in depreciation especially, the income needed from real estate is really half of what I needed from corporate America, because I essentially pay no taxes because of depreciation. So as long as I got to about 125,000 in straight income from my income properties, then I could replace my corporate income. And that's the number that I got into. And slowly I've been building a little bit more, doing some 1031 exchanges, and kind of fine tuning where some markets have gone up quite a bit and it doesn't make sense to rent the property anymore. So I would sell it and buy two more, that sort of thing. But that's kind of the goal for me, is really to become independent, and then do whatever I want to do with my time.
And for people for young entrepreneurs starting out, how did you went about and got your first deal? Run us through that, through the numbers, how you got the deal in the first place. Can you run us through the process?
Sure. So I did a lot of homework. I studied quite a bit. This is 2011, where I think necessity is the mother of invention. When you're really pressed and things are not working and you're disillusioned. So I started to read books and listen to podcasts and see if I could find a thread. And what I knew I did not want to do is replace my corporate America job, with yet another job of flipping properties and trying to find deals and all that. That to me was another business, and I didn't want to get into that. I wanted to find something that created wealth on the long term, and it was not very active, but a combination of active and passive. And I was fortunate enough in listening to different podcasts. A lot of them just completely turned me away from the real estate market, honestly. But I was fortunate enough to find Jason Hartman with Creating Wealth, and he has a very big podcast. Appears in 164 countries. Lots of people listening to it, and his philosophy has resonated with me, which is essentially just buy properties for the long term. Don't speculate. Really try to get properties that make sense the day you buy them, and they have a good return on investment from a rent to value ratio. So we try to, his philosophy was to try to find properties that have at least a 1% rent to value ratio. So if the property is worth $100,000, you want to get at least $1,000 a month in rent, and that will cover all of your expenses, including property management, taxes, mortgage, getting as high of a mortgage as possible, and try to leverage the investment, play with inflation in your favor in one end, but fix your costs from a mortgage perspective on the other end. So I started to listen to his podcast and really pay attention to his philosophy. And that's how I got started. I bought a few properties through his network and participated in a lot of the events that they had. And we've become friends. As a matter of fact, we now have a software business, realestatetools.com, which is really good powered investors, real estate investors. And we also have apps on the iPhone App Store. And we also have Venture Alliance, Masterminds. We're doing a lot of business together. But it kind of grew from this matching of my desire to find this sort of investment that wasn't very labor intensive, but that would still allow me to create wealth on the long run and replace my income. It fit perfectly what my goals were.
And how was the first property? How many units? What was the purchase price?
I started when I decided to buy properties in 2011. Prior to meeting Jason, I actually went to Florida, and at the time in 2011, the recession happened in 2008. The property prices just completely crashed. And in Southwest Florida, there were a lot of properties available, and I went on my own, not really knowing, what to do very much, but I decided to buy a property for $148,000, and this was in Naples, Florida. And this property was renting for $1,400 at the time. It wasn't quite that 1% rent to value ratio, and I actually paid cash for the property. Looking back, I should have financed it, but I paid cash for the property. And then I bought another one in Naples as well. I paid, I think, 119 or 129. I can't remember quite right. And was renting it for about 1,200, 1,300 or so. It turns out that this first property, I was really at the right place at the right time. I should have bought as much as I could back then in Florida. But this particular property, the one that I paid 148 in Naples, I sold for 250 not too long ago, because the rent wasn't catching up with the price of the property. I wasn't able to get $2,400, $2,500 a month for that property. So I sold that, and I bought two other properties on a 1031 exchange. But that's kind of how I got started in Florida. And then I went on to Atlanta, Georgia, and ended up buying a whole bunch of properties there. Got to know the local community banks, and it just happens that they had a package of properties they wanted to sell. So what I find in the process that I went through is the hardest part is really to get started, to get your feet wet and understand how things work. And you can read as much as you want, but until you actually buy it and you understand the process, you're not going to feel as comfortable, and you're not going to learn as much. So after I went through that process, many doors started to open, and deals started to appear, and offers, and people started to come by with ideas and wanted to do business. So it became easier after a few months.
And how would you advise someone that is sitting in Europe that wants to invest in the US, but since we have this geographical kind of impediment, how would you advise them in starting out?
Well, if the person is to follow a similar path that I did, the main difficulty is really the financing piece. A lot of the banks, for conventional financing in the U.S., they want to finance to U.S. citizens. There are providers that will sell to foreign nationals, but usually they expect them to pay cash. Some provide financing, but the terms are not very good. You have to put 50% down. The rates are usually high. It's not as ideal as you want to be. But given those difficulties, there's still plenty of opportunities in the U.S. I mentioned Florida. Florida is still, even though the prices have gone up quite a bit, there's still quite a bit of growth going on. I know there's a lot of Brazilians, for example, since I'm from Brazil, invest in the Orlando area, and I have friends that have property there, and they have done very well. So there are even providers that cater to that sort of a business, and they have some relationships there. The interesting thing in the U.S. is that, amazingly enough, the deals or the opportunities in the U.S. in many ways are much better than in many places in the world. I travel a lot. I've been to many countries, and it's pretty difficult to find this ratio of rent to value of at least 1%. I have some properties in Brazil, and it's very difficult. People are happy if they get 0.5% for a rent to value ratio. And in the U.S., if you look in the southeast area of the U.S. especially, you'll find plenty of properties that meet that criteria. That combined with the rule of law in the U.S. being strong, the tax advantages, which is, by the way, coming back to your question, even though for foreign nationals wanting to invest in the U.S., it's a good investment from a cash flow perspective and long-term growth. The tax benefits are not necessarily there because if you don't live here, you don't get the tax breaks that people living here would get. But the idea that the whole southeastern the U.S. has opportunities, given the differences between nationals and internationals, is still a good opportunity. Texas still has some opportunities. Georgia, Alabama, Florida. It's probably the best bet is probably to do some homework and try to find the financing piece that works. And if you search for, financing for foreign nationals in the U.S. in a particular area that you might be interested in, I think you'll find some banks that are willing to do that. And again, expect to put more cash down in order to buy the property. It's not as easy as it is for a U.S. citizen.
At this time, where do you see yourself and the future of your company going? So you now have your financial freedom badge. What's next for you?
Well, my priority now is really the family. I have 2 young boys, and they're very active here. And when I retire from Apple, that was one of, when I wrote down what I wanted to do with my life, that was my priority for the next few years. So even though I'm in many ways, I'm even more active now than I was when I was at corporate Apple. I have the software company, I have masterminds that I belong to, and I manage my properties. What I see happening now is some fine tuning of the properties, selling here and there, and just getting more yield for the properties. As more money accumulates, I'm sure that I will get into bigger deals, commercial properties that partnerships that might show up. I'm sure that will come up, and opportunities have come up already. And as far as buying properties, there's still opportunities in the U.S. I'm also having some ideas on perhaps merging that real estate tools company with a bigger company, and also in the real estate business. But that is something that I might want to do a few years from now, get more involved. Interesting enough, there's plenty of opportunities, as it seems like it's an analogy that we use with chip design in computers, that you have a hard drive, and it doesn't matter how big that hard drive is, you always fill it up with stuff. And when you retire, it's a similar concept. It doesn't matter how much free time you have, you can always find interesting things to work on, and you become just as busy with that, with that new venture. So it should be pretty interesting.
Something that we didn't cover in the beginning, and just wanted to make this clear for our listeners. The first properties that you invested in and the properties that you are looking for, these are single families or multi-families? This is an important distinction.
Right. Yeah, no, good question. Most of my properties are single family. I do have a few multifamily properties, but these are duplexes and fourplexes. The reason for that is getting conventional financing, you're limited to 4 units in the U.S. So I don't have any commercial properties at this point.
Okay, so but how did you finance the other ones? Did you do 1031 exchange from the first ones? You use a portfolio lender? How did you pass that 4 properties hurdle?
Sure. Yeah. So I tried, the way I did it, this was very, very important when I was looking at how to scale up to a level where I could become financially independent. You have this requirement or this limit from conventional financing, which is financing backed by the agencies Fannie Mae and Freddie Mac. It's essentially you can buy up to 10 properties per person. If you're married and your spouse qualifies, you can buy 20. And after you go through and those are great financing in the US, at least for US citizens, that's 30-year fixed. At this point, it's 4.5%, maybe 5%. It's, a year. It's excellent type of financing. So I want to get those first. So I filled those up pretty much. And then, as I mentioned earlier, because I was having contacts that would show people that would, doors that would open and people that wanted to do business with me, I got to know local community banks that offered financing once I go beyond the 10 properties. And this is what we call commercial financing in some circles, but really it's financing that is not backed by Fannie Mae or Freddie Mac. And what that is, usually it's a shorter term, 5 to 10 year term, and a higher interest rate, 1% or more that you pay a year. And the qualifications are actually easier for these. It's not as stringent as conventional. So I got some loans from community banks in different areas that I was interested in. And I worked with a large bank like US Bank, which was a bank that was doing loans in different states. So I went to them and I got one of those commercial loans that I mentioned earlier. And for the 1031 exchange of properties that I've done recently, I actually chose not to do financing for these properties. The reason, just for your audience benefit, is I sold a relatively expensive property in Naples for $250,000, and ended up buying 3 different properties that are much lower price somewhere else. So banks usually have a limit on how low the property price goes before they say, no, we're not going to finance, because their fixed costs are not worth it. So I decided to just get cash for those, pay cash for those, which helps my income side, obviously, but it's not as good of an investment, long-term investment.
Gotcha.
I don't know if that answers your question, but that's kind of the sequence.
And regarding your software company, tell us a little bit more regarding that. How can our listeners learn about regarding what you are doing?
So real estate, if you go to realestatetools.com, you'll see the umbrella of different tools that we have. But in a nutshell, if you have an iPhone or an iPad, we have essentially two apps. One is for evaluating properties, and it's called Property Evaluator. Very easy to use. You plug in a few variables for the property, and it will help project, do a 1 year or up to a 30-year projection of the property. And you can create portfolios. You can upgrade the app. Within the app, you can get a paid version of the app. It's free to begin with, but you can get a paid version that will allow you to do more. There's more features associated with it. We also have Property Fixer, which is another app in the App Store. And that's really for people that are doing flipping. And a lot of the providers who sell properties to investors use that app because it's a very easy to use app. It allows you to calculate your return on investment with some fixed costs, and it's really intended for that purpose. Then we also have as a software as a service, as an online cloud type app called the Property Tracker. So if you go to propertytracker.com, this is a very interesting app, and it's really the core application software that we have. It has basically three main purposes, the way I look at it. One of them is to evaluate properties. Similar to the app that I mentioned, it allows you to plug in some variables and see if the property makes sense, given all of the costs and expenses and so on. See what your return on investment, all your financial indicators are, IRR, and so on. It also then, that same software, Property Tracker, it also allows you to track properties and track the income and expenses. It's very important when you're doing taxes to make sure that you obviously track those income and expenses, but also differentiate between repairs and improvements and depreciation and what costs are supposed to fall under what category, so that when you are about to do your taxes, you can give your accountant a proper starting point. The tool makes it very easy for you to track your expenses and then generate the forms that are actually needed by the accountant, the Schedule E form, which tracks rental properties, and also schedule depreciations for your loans and also for any improvements that you make to your property. I use it for my properties. I've been a client myself, and I'll become one of the owners along with Jason of the company. We recently did a upgrade to Property Tracker and modernize the software quite a bit. So honestly, if you own even one property and you're not really keeping track of it properly and producing the right forms, I think you're leaving money on the table and leaving yourself exposed to an audit by the IRS if you're not keeping track of it. So it's a must-have for any investor out there to keep track of their properties. So that's kind of in a nutshell. Yeah.
Also, I'm a bookworm. I read like an insane person, and I like to share my book list with people. So I would like to know, what have you been reading lately that you like to share with our listeners?
Okay, so I'll switch gears a little bit. And one of my other passions is longevity and biohacking. So I've recently become a coach for longevity and biohacking through a company called Bulletproof Executive. So the main person at Bulletproof, Dave Asprey, he's written a couple of New York best-selling books. The first one from Bulletproof was called The Bulletproof Diet. I highly recommend that to your listeners. And the second one that he just published not too long ago is what's the name? I forget now. It will come to me. But if you just search it up for Dave Asprey, you'll see that on Amazon. So I highly recommend. And the second book really talks about the mitochondria, the energy producing ancient bacteria in your cells, and how you can hack or how you can change your lifestyle to make it so that you're more resilient. The name of the book is Headstrong, by the way. So I highly recommend these two books. I follow a lot of what the recommendations are, and certainly have done very well health-wise over the last few years.
And also, advice to your younger self, what would you say?
Start sooner. Real estate is very interesting. There's a saying in the US that goes something like this: don't wait to buy real estate. Buy real estate and wait. And that is very important. I coach clients. I participate in events with younger clients, and it always impresses me when I see somebody in their 30s, sometimes even early in their 20s, where they just have a little bit of money, but they have that entrepreneurial thought that if they can just, instead of buying this big house and paying this big mortgage, well, maybe they should be renting and taking that money that they would otherwise be paying for down payment and investing themselves and having the entrepreneurial spirit. So I really encourage people to start that investment mindset and go to the top of the chain, the food chain, the way I look at it. Being an employee, it has its benefits, and I certainly, I'm very grateful to Mr. Steve Jobs for helping me so much in my career. But at the end of the day, the things you can do and the passion that is behind your ideas can only be fulfilled if you have the time and you have the money to do it. And becoming an entrepreneur, and real estate can certainly help you in that path.
And finally, where can our listeners get a hold of you if they have any further questions?
Sure. The best place to go is fernandoaries.com. That's my website, and there you will see links to Jason's company. I'm a counselor with his company, jasonhartman.com, and there you can see links about the bulletproof coaching as well, and ways to get a hold of me, and from there you can navigate away.
Fernando, it was wonderful having you with us today. Hope to speak with you soon.
Oh, you're welcome, Diogo. Thank you.
Bye-bye.